Hey everybody, welcome to the channel. I'm Sheen, your host. This is Money Matters. In this channel, we talk about money, finance, how to grow your money, how to invest your money, how to make money work hard for you. Check out my other videos. If you like what I'm doing, please consider subscribing. Give a thumbs up. It really helps out the channel. It pushes the YouTube algorithm and helps to share the video with a lot of other people. All right, I got a good video for you today. It's probably going to be a little bit longer than my other videos. It's going to be 5 picks, 5 stocks that I'm really interested in purchasing and adding more to in my portfolio, starting with this month, April 2020. I'm going to go over each company, what I think about them, why I'm interested in them, and we're going to break down their numbers, their balance sheet, and their revenues. All right, so let's get started. We've got a lot to do. So number one is Skyworks, Skyworks Solutions. So this is a 5G play. So if you guys don't know what 5G is, it's basically the next mobile internet revolution. It's going to replace all your 4G, 4G LTE phones. The data is going to be at least 10 times faster than your current 4G speeds. The first time I talked about Skyworks was way back in one of my beginning videos, one of my very first videos, and it was one of the very first stocks I started buying when I first started doing these YouTube videos. So if you look back into my videos, you'll see me talking about 5G and you'll see me talking about Skyworks. And so recently, Skyworks has taken a huge dip, as with the rest of the market, because of this whole CV illness 19 situation. So Skyworks has taken a huge hit, and now their stock price is really, really intriguing. I've been taking advantage of these low prices, buying additional shares and lowering my cost basis. If you guys watch my videos, you know that's what I love to do. Anytime there's a dip in these companies, I like to buy them at the lower price, eventually bring down my average cost. So let's talk about Skyworks. So basically, at the heart of it, Skyworks is a semiconductor company. They make microchips. You'll see their chips in all of your electronic devices, in your iPads, your Galaxy tablets, your iPhones, Samsung phones. All the big manufacturers have Skyworks chips in their products. Here's a teardown of the iPhone. You'll see there's 2 Skyworks chips in blue outline and in green outline. So those are 2 Skyworks chips. This is a Samsung Galaxy teardown phone. You'll see that there's a Skyworks chip highlighted in green there. These are the customers of Skyworks. Basically, every single large company works with Skyworks. You'll see a lot of them are auto manufacturers, Tesla, Ford, VW, Hyundai, Toyota. And that is what is really interesting to me about Skyworks. If you've seen any of my videos, you know I am really interested in self-driving. I believe self-driving is going to be the next revolution, and that will be a multi-billion, if not multi-trillion dollar opportunity. And here is their slide talking about the new connected cars. So they predict 73% of cars to ship by 2024 will have cellular connectivity. So basically, all Teslas currently ship with cellular connectivity. It's a 4G connection, basically the same thing as your cell phones. So Tesla uses this connection to give updates to the car, to extract data from the car, to do a lot of their self-driving capabilities, to do a lot of their infotainment, streaming things to the car directly. So that it doesn't go through your phone, it just goes directly to the car. So Tesla's the biggest manufacturer that is doing that. I'm not sure if any other people are doing it. Maybe BMW also does some cellular connectivity to the car, but definitely the biggest player in cellular connectivity within the car itself currently is Tesla. But with self-driving revolution coming in the next 3 to 5 years, I predict all the cars are going to have their own connectivity and their own high-speed connectivity, and that's where 5G comes in. 5G is going to be at least 10 times faster than current 4G speeds, and that's absolutely necessary to do self-driving. Self-driving means the car is going to automatically drive itself. The car has to make decisions on when to stop, when to go. The car has to make split-second decisions if some kid runs into the middle of the street. So that's a lot of data for all the sensors and cameras to relay back to the company, back to Tesla. Also connecting to other cars. So when a car moves forward and is self-driving and another car is coming, it knows that because it's actually communicating with other vehicles. So as far as cellular phones and iPads and tablets and all these kind of devices, the additional revenue gained by 5G is going to be dramatic. So here's a slide that shows you basically 2G phones, the conductors, the semiconductors in them and the chips in them was not very profitable. It was only about $3 per device. Jumping to 4G, it was about $18 per device. And jumping to 5G is going to be roughly $25 worth of chips and filters and semiconductors in each 5G device. So the growth potential for any 5G company producing semiconductor chips is going to be dramatic compared to 2G, 3G, and 4G. So here's a good slide that shows you what 5G is going to replace. It's going to take a big chunk out of the current wired networks that we have. The only reason people use wired networks and wired connectivity currently is just because it's faster. but 5G is going to really cut that down. So anywhere that uses wire, they're going to be able to replace that with 5G technology. Basically 2G and 3G are going to be out of the picture. 4G is going to have a smaller chunk. So 5G is going to definitely replace a lot of the old technologies that we currently have. So here's Skyworks chart as of current. They are trading at roughly $90-ish. That is actually coming up from their low. They hit in the 60s and the low 70s after this whole CV situation, this illness 19 situation going on. So they have kind of rebounded a little bit, but that is nothing compared to what they were trading at before all this went down. They were trading at more than $125. And so to see that price cut down to $90 and down to low $75, that's definitely very intriguing. And I was buying this stock when it was in the 70s and 60s, so lowering my cost basis. Let's look at their numbers real quick. So their total revenue, you see those numbers are growing. 3.2 billion in 2016, 3.6 billion, 3.8 billion, and 3.3 billion in 2019. How about their net income? So 2016, they had 995 million. Then they went to 1 billion in 2017. Then 919 million in 2018 and 853 million in 2019. So definitely their net income is not as impressive as their revenue growth. But I predict in the next 3 to 5 years after the 5G rollout is complete, their revenue is going to definitely grow with each 5G device being sold and with, like I said, cellular connected cars in the future. So let's take a look at their balance sheet real quick. Total cash on hand is $1 billion in cash. Total current assets is over $2 billion. And their current liabilities is $374 million. So their balance sheet looks beautiful. They have plenty of cash to weather the storm that they currently are in now. Basically, 5G is going to be delayed. All the analysts have said, there's even reports that the 5G rollout is going to be delayed due to this global economic slowdown with the illness 19 going around affecting basically the whole world right now. After we get on the other side of this, 5G is definitely going to pick up. We need 5G. We've been waiting for 5G. A lot of technologies have been just on hold because of needing faster data, faster throughput. And so all these things, the Internet of Things, smart cars, our phones, our tablets, all these devices, smart cities, data transfer speeds, all this is all being delayed because we currently do not have the speed and capability of doing it with our 4G networks. All right, so that's Skyworks for you. Number two is Revolve. Again, this is a company that I talked about before. So Revolve is a fashion company. They basically make less like 90%, 95% women's clothing. So I know nothing about women's clothing, but what I like about Revolve is they are not doing traditional marketing like a lot of other companies. They're not doing any television marketing, any billboards, anything like that. They're definitely looking into the future, and it's all on the internet. It's all about social media, and they are strong in the social media space. So if you search Instagram for Revolve, you're going to see a lot of social influencers pushing their products, and that's how they get their word out. They rely on all these social influencers talking about their products, and it kind of spreads word of mouth and spreads all over the internet. So here are some highlights of their numbers. So their net sales for Q4 of 2018 was 127 million, and that jumped up to 147 million for Q4 of 2019, which represents a 16% year-over-year growth. For fiscal year 2018, they did 498 million, and that jumped to 600 million for fiscal year 2019. That is a 21% year-over-year growth. How about their net income? Net income jumped 9% for Q4 of 2018 to Q4 of 2019, and their fiscal year 2018 to 2019 had a 16% growth. Also, they have plenty of cash on their balance sheet. So here's their stock chart. They were trading well over $35 6 months ago, and you see the decline down to roughly $8.70 as of this recording. Definitely people are not interested in shopping right now, but I believe when we get on the other side of this, they will see their revenue come back. Their social influencers are still pushing their products. They'll be back to their $30, $40 stock price after this whole thing rolls over. So here's their income statement. Amazing growth, 399 million in 2017, jumping to 498 million in 2018 and 600 million in 2019. Their net income, amazing growth as well, 5 million in 2017, jumping up to 35 million in 2019. Again, here's their balance sheet. Total cash on hand is 65 million. But their current liabilities is 101 million. All right, number three is Disney. I talked about Disney a lot in my other videos. Basically, the rundown on Disney real quick. Disney is shut down. Disney World is shut down. Disneyland is shut down. Disney in Japan and Disney in China were shut down. I'm not sure if they're open back up yet, but definitely no one's going to Disney in the United States. And obviously they're losing revenue. Disney is not like a Starbucks where there's this illness 19 going around and you don't go to Starbucks, they're closed. You don't buy your latte today and tomorrow you buy 3 lattes to make up. That doesn't happen, right? So like things like that, the revenue is completely lost. They're never going to make that revenue up. But Disney is different. Disney is a tourist attraction. It's like one of the things you have to do in life, especially if you have kids. It's like you have to go to Disney at least once. So maybe you canceled your trip this year, you're going to go next year, or you go the year after that. Eventually, Disney is going to make up their money from all the lost revenue of their theme parks being closed. But also Disney has a lot of things. They own Hulu, they own ESPN, own ABC. So Disney is a huge, huge company. It definitely isn't going to go anywhere. It definitely is not going to disappear. But their revenue is definitely hurting. But I believe all that revenue is going to come back. So their stock price had a nice big jump in November of 2019. People that watch my older videos know why, and that's because Disney Plus. That's right, Disney Plus. It was a huge success, and it still is a huge success with all the Marvel movies, all the Disney movies, obviously Star Wars. So just launching in November 2019, they have 28.6 million subscribers. 28.6 million subscribers multiplied by how much Disney Plus costs. So it's $6.99 a month if only you get Disney Plus. It'll be $12.99 if you combine Hulu and ESPN. So I calculated that if you had $6.99 per month, multiply that out by 12 months, it gives you roughly 80 some dollars. That times 28.6 million, that is an additional $2.4 billion in revenue. And that's why they had the stock price jump in 2019, because people know Disney Plus was a huge success and it's going to be a huge success moving into the future. And so that's why their stock price jumped. But now their stock is trading at less than what it was trading in November. So that means, so people have just basically excluded that extra revenue that they were getting, that extra $2.4 billion of additional revenue that Disney Plus brought in. So that's kind of being unaccounted for. So here's a stock chart of Disney as of current. It's trading at roughly in the mid to low 90s. I was buying this into the low 90s and into the low 80s as well. So Disney was trading for well over $145 before this whole situation happened. And in fact, in this chart, you'll see in November, the stock was trading at roughly 130s. And then after the Disney Plus launch, it jumped up to the 140s, up to 150. And it was riding that 140, 150 wave until this whole CV situation happened, bringing the price down to their current price of $97. I look at that and I say, this is all just short term. Disney's going to make up their money. Disney is huge. People are going to continue to go to their parks. So this is just a short-term sale that Disney is on, and people should be buying it. People should be buying it because they know Disney is going to go back up to the 140s or even higher after all this is over. And so that's why I'm really interested in Disney, and that's why I've been picking up shares at these reduced prices. So let's look at their income statement. So obviously Disney is making major revenue. In 2016, making $55 billion, jumping to $69 billion in 2019. Their net income jumping from $9 billion to $11 billion from 2016 to 2019. Their balance sheet does not look that great though, but hey, this is what these big corporations do. They're always spending their cash, acquiring new companies. So their total cash in their balance sheet was $5.4 billion in 2019, and their current liabilities is over $31 billion. All right, so that's my thesis on Disney. Now number four. Number four is Peloton. I never talked about Peloton in any of my previous videos, but I did buy Peloton before I started making YouTube videos. I bought Peloton in December of 2019 when their stock took a hit because of the whole commercial situation. If you guys don't know, you just Google it, Peloton commercial. There's a whole huge uproar about this poor lady in this commercial. Basically, everyone is at uproar because the commercial showed that the husband bought his wife this Peloton bike, this exercise bike, and people were just implying that, oh, he wanted her to lose weight or something. It was stupid. It was silly. It was all over the internet, and their stock price took a dip because of that, which is absolutely stupid. It has nothing to do with the fundamental of the company. It was just stupid people on the internet just complaining about things just to complain. So if you guys don't know what Peloton is, basically it's a fitness company. So Peloton has over 2 million members. Their main flagship device is their bike, their exercise bike. They just came out with their treadmill in 2019. So it is a kind of a high-end company. Their treadmill is about $4,000+. Their bike is more than $2,000. What makes them unique is their connectivity. They sell you a subscription, and with the subscription, you can log in and ride your bike with a class, recorded classes that you can ride along. You can also ride along and race other people in real time. So there's leaderboards. You can always see how high you can get on the leaderboard. So that's kind of like motivation. You can also attend live classes. So they have these studios that they record live races on the Peloton bikes. But they also have like weight training classes and yoga classes that you could just tune into anytime you want and work out with the class. But one of the biggest reasons why I like Peloton is this. Their CEO and founder, John Foley, he's a co-founder and chief executive officer. So basically, this company was OG Kickstarter. Back in 2013, they were a Kickstarter company. They got their funding in Kickstarter. Fast forward to 2020, they're pulling revenue numbers that look like this. 219 million in 2017, 435 million in 2018, up to 915 million in 2019. So up on top there, connected fitness subscribers jumping from 107,000 in 2017 to 511,000 in 2019. So like I said before, one of their biggest revenue is not only selling you the bike, the hardware, the equipment, but obviously selling you that subscription and that monthly subscription. So as an investor, my question would be, are they able to retain these subscribers? You know, because you don't want people to subscribe, try it for a few months, and then they cancel. What is their retention? That's super important. So look at the retention rate. So in 2017, they lost only 0.70% of connected fitness subscribers. 2019, they only lost 0.65%. So less than 1% loss from 2017 through 2019. Every year, less than 1% loss of their monthly subscribers. Look at their stock chart. They were trading at just over $35 before their whole internet commercial scandal. That dropped their stock price to the upper 20s to 30s. And then after this whole CV situation, basically starting in March, you see they were dropped from roughly $27 to $20 and below. They have since made a jump back to $27, and I have been recently adding to my position at this $25, $26 price range. So here's their income statement again. 2017, 218 million, jumping to 915 million in 2019. So their net income, you'll see they are not profitable, losing 195 million in 2019. But that doesn't bother me at all. I expect them to be taking a loss with their growth that they're doing, with their new subscribers that they're getting. So all this has a cost. And so obviously, they're going to have to spend money to attain these new subscribers. They just pushed out a new product in 2018. They have expanded a lot of their studios and a lot of their stores, getting new coaches and pushing out their content. So I expect them to be spending money on that, and that's why they are net negative right now. Their balance sheet, total current liabilities of 290 million. But they have total cash of 378 million. All right, guys, this is the last one. Thank you for sticking around for number 5. This is number 5, and it is Square. So if you guys don't know what Square is, basically they are a payment processor, a payment aggregator. So you've seen companies, probably some stores or restaurants you've been to, they have these devices that you swipe your credit card or tap your credit card. Even their cash register may be a Square device. So Square is huge with small businesses. I'm sure you've seen them around. Next time you go out to a store, look for those Square devices. Anytime you swipe your credit card at a small business, it's probably either going to be Square or Clover. Clover is the other player, but Square is probably the biggest player out there. So here are the metrics for Square. Total net revenue, 1.31 billion in Q4 of 2019. That is up from 933 million of Q4 of 2018. Let's look at their gross profit. 380 million in Q4 of 2018, jumping to 527 million in Q4 of 2019. You'll see their net income. So you see in Q3 they had 29 million, and then Q4 they jumped up to 391 million. That is contributed to their sale of Caviar. Basically, they sold their food delivery company, which was called Caviar. They sold that to DoorDash, and that gained them 373 million. But regardless, their growth is definitely impressive. They were down negative 28 million in Q4 of 2018, jumping to a positive 29 million in Q3 of 2019. But aside from their payment aggregator and their devices and their software that they sell for small business, small companies, one of the biggest and interesting plays that Square is doing is with their Cash App. If you guys don't know what Cash App is, basically they're trying to get into this space to compete with Venmo and PayPal and compete with Apple Pay and Google Pay and all these other pays that you do on your phone. So they have an app. It's called Cash App. But what they're doing is they're trying to integrate the whole ecosystem of financial services. So essentially, you can send money to your friends can send money to you, your employer can pay you your paycheck through the Cash App. In the future, you'll be able to send money internationally through the Cash App and receive money internationally through the Cash App. You can also buy stocks in the Cash App. You can also buy cryptocurrency in the Cash App. So you see, they're trying to integrate basically everything financial in one ecosystem. So basically everything will be in one system. You wouldn't have to have a separate bank, a separate checking account, a separate savings account, a separate brokerage to do your stock trading. You wouldn't have to exchange your money if you go to another country, or if somebody was coming to this country, they wouldn't have to exchange their money to US dollars to spend it. It will be all integrated into one ecosystem. And that's what the Cash App is trying to do. And I can see if they are successful with this, it's a huge task, but if they're successful with this, they're going to be a major disruptor to the big banks. So here's their income statement, 1.7 billion in 2016, jumping to 4.7 billion in 2019. Again, they were a negative 171 million in 2016, jumping to 375 million, positive 375 million due to their sale of caviar. Their balance sheet, total current assets of 3.2 billion and total current liabilities of 1.6 billion. So guys, I know this was a long video. Thanks for watching. Let me know what you think. Let me know what you think about my 5 stocks for April of 2020. If you agree with me, let me know. If you disagree with me, let me know. Oh, by the way, I'm only invested in 4 out of these 5 companies. There's one company that I have not invested in out of these 5. Leave a comment below. Let me know which one you think it is that I am not invested in. I'll let you know if you're right. And also let me know if you're interested in me breaking down any of these companies further for a future video. Leave a comment below. If you found any value in my video, please give that thumbs up. It really helps out the channel. Consider subscribing. You'll get updates on all my videos. Catch you in the next one. Peace.